Hey traders, Akil Stokes here. Welcome back to another episode of the Trading Edge Weekend Edition for you guys that are new to the Tier 1 trading platform. This is a video that I put out each and every weekend, this week on Friday, sometimes it's on Sunday, but essentially it's giving you my outlook on the markets for the week ahead. So what we're going to do is we're going to take a look at news. Usually we're going to skip that this week because I'm kind of in a rush and I haven't done my research yet, but we'll talk about it in Tuesday's live room. But typically we take a look at the news events that are coming up, talk about what to be aware of, what to prepare for, and we also take a look around the markets on the higher time frame, sharing with you some of the best ideas that are on my radar. For you guys watching the YouTube version of this, every once in a while I kind of break up the trading edge and I put a portion on YouTube as well. What I do is share with you one of the pairs that we look at. I try to keep it short, sweet, and informative. Now, something I think I'm going to do in the future for YouTube is going to start taking requests, right? I got a few requests this week to look at. I think one was Bitcoin, one was gold so far. Didn't really have enough time for people to give their feedback, but I think in the future, what I'll start doing is on Friday, just asking you guys, hey, are there any specific pairs that you want to take a look at? I'll do that on social media, so on the Twitter, on Instagram. So make sure you follow me over there. You can kind of chime in on what you want to see, and maybe it will make the cut if there's enough interest, and of course, if there's enough in the market to take a look at. Now, this week, we're going to start with the dollar yen, and this has been one of my favorite pairs, or one of my favorite setups. Unfortunately, we just haven't gotten to the meat of it yet. And for you guys that are new to trading, trading is a waiting game. I know many of us get into trading because we want that action, we want that gambler effect of loud bells and whistles and lights going off and pulling the slot machine and ding 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 ding, all the action, right? Unfortunately, trading is the opposite. If you're trading good, trading is typically boring. Why? Because you're consistent, you're steady, you're analyzing the market the same exact way every single time. You're making predictions well in advance, and then you're just waiting to see if they play out. And most of the time, you have all these awesome predictions made, and the market does something else, and then you got to erase your chart and make a brand new prediction. But the payoff is when you make those predictions in advance, when the market does follow through with what you're thinking about, and you're prepared and you get involved in the trade instead of panicking, kind of like that stress versus distress we talked about last week. So what I'm looking for here on the dollar yen is we have a head and shoulders bottom that has formed, and I'm waiting for the reversal. We've already got kind of a partial reversal depending on how you draw your head and shoulders, and we'll talk about that in a little bit. But if we take a big bird's eye view on this pair from the weekly, you can see we're coming into a pretty decent location. And really, before we even go to the weekly, I mean, just look left, right? These were those annoying spikes that happened at the very end of last year, beginning of this year. And you can see that we've come down into this level. We've retested at the 105 even handle, and we've held. But this isn't the only time the market has tested this level. If we jump out to the weekly time frame, just take a look left, right? We've ran into a little bit, after trading below it, ran into a little bit of resistance here. But even looking left, we found resistance up there. Looking left even more, resistance in here in the past, all the way back to the year 2000, 2004, 2005. So this has been a rather important level in the market. I'm not saying that we can't go lower. We certainly can, as price has proved that before. But what we want to do is when we're trading, we want to be predictive in our execution, or excuse me, predictive in our analysis, reactive in our execution. So we're not assuming price is going to reverse at this level. We're waiting for price to get to this level. And then we're waiting to see what price does at that level. And if it gives us a signal of a potential reversal, then we know to start to look to get involved. And the head and shoulders pattern is a classic reversal signal in the market. I'll just go ahead and draw it in for you guys, where price has come from a descending move. Pardon that noise in the background. Got some more work being done to the house. But we come down. We retrace a little bit. That's going to create our left shoulder. We retrace or extend down here, excuse me, kind of a double-headed head, a double bottom down here, creating our head. We come back up to retest that neckline. We create our right shoulder, and this is our head and shoulder pattern. What we're looking for is a break of that neckline. Now, there are a few different ways you can draw on the neckline. It's going to be a personal preference depending on how you like to do your technical analysis, right? You can draw it as kind of a sloping or a slanted trend line, like on the screen in front of you, where you're connecting this left shoulder, the high of this, or the high of the neckline after the left shoulder, to the next retracement right here. If this is the case, you can see we already have a violation, which means this head and shoulder has been validated. Or if you prefer kind of what I like to call horizontal support and resistance, what I like to do is take the high of this neckline, which happens to be right here, draw that horizontal line in, and that's going to be the true break of resistance. Now, doesn't matter which one you use; it's kind of personal preference. I don't personally like using trend lines, but that doesn't mean they don't work, right? The key is finding something that works for you, consistently doing it, make it rules based. Obviously, test it to make sure it works and is profitable, has a positive expectancy, and then consistently use it in the market. So I'm going to give you two scenarios right here, right? So one, if you're using this horizontal resistance line, we need to wait for this level to be violated in order to really have confirmation of that head and shoulders. And if we violate that level, where I expect price to go is going to be right up here to this next level high. Right now, we do have a sneaky structure zone in here, right? This is going to be difficult perhaps for execution once we get down to it. It'll all depend on if and how we break it. But this is where I would expect price action to go to, about 110.50. So looking for a break of about 109.25s up to about 110.50s. That's about 100 and what, 100 and a quarter, 125 pip move right there. And one of the reasons I predict this level is because of this, right? When the market is moving harmonically, we like to do one-to-one measured moves. So if I take the length of my head to my right neckline, I'm going to change the color because I don't like how orange looks on here. And I copy and paste that. A one-to-one measured move, if I can grab it right, one-to-one measured move, right? This is also known as an AB equals CD pattern, right? Drawing it to the right shoulder would put us right at that level of previous structure. We have a little bit of Fibonacci confluence there, not as much as I would have liked. We have a 786. So if I take my Fibonacci extension from this swing high to this swing low right here, you're gonna see a 786 up there. Ideally, I'd like a little bit more. I'd like maybe a 127 extension as well, if I can draw this on the right way. Just delete that, there we go. 127 extension as well. We're not going to get that, or a 161, I should say. It's going to be a little bit above, around the 111 even handle. So it's in the vicinity, but not quite there. But we do have a good amount of confluence there to make a prediction that price is likely to continue to that level if we can travel higher. Again, not an easy path, right? You've got this level of resistance right in here, about 109.70s you have to deal with. But I think there's a good chance that we can push up past that, past 110 into about 110.50. So if you're using this horizontal level of resistance, you got to wait until this is broken. But right now, you should be going through that process in your head, that if-then thought process, right? For you guys that are on a platform, if you check out the recording of, I think it was, had to be Thursdays. Let me just check real quick. I believe it was Thursday's live room session. We actually did a live trader assessment with one of our traders. And a trader assessment is kind of what turned my trading around. When I got the call from my trading mentor and he kind of assessed me, it was a kind of a turning point to realize that I didn't know what I thought I knew and I needed help. I was kind of on the right track, but I needed to kind of put things together the right way. We did that in Thursday's session right here, a trader assessment, where a trader was sharing with us an idea and we kind of grilled him and came to find out that his rules weren't as solid as he thought. And we worked on helping him patch those together and hopefully putting him in the position where he can create some better rules and have a solid trading plan. So if you're on the platform, check out this. It's from the live room. You guys know my sessions are recorded right after we discuss Euro Aussie around that 43-minute mark. It's going to be powerful for many of you, I promise. But I forgot where I was going. Got off on that tangent. If you're looking to trade this trend line, so the excuse me, the sloping level of resistance here, here's what we can do, right? We can go down to our lower time frame and we can start really IDing where we think price is going to come to next, right? And I see a few things that's happening on the chart. One, we're consolidating. It is a Friday afternoon or late Friday morning when I'm recording this, so the markets are pretty dead. But Our previous breakout point before that was right here. This is where price action ran into our previous level of structure resistance. We kind of put in this, this triangle, this wedge pattern, and then we broke out to the upside. So whenever we see these massive breaks, right, if price can return to that level, those are often very good levels to look for trading opportunities, right? And if we go down one more time frame, right, you supply and demand traders should be familiar with this. If we go down one more time frame, we'll get a clearer view. And I think a good level to look for is going to be right in this area between really about 108.30s. I'd get your stops below 108 evens. Really 108.30s to about this level, 108.15 should be the level, but get your stops below this level just to be safe. And going back off that one-to-one measured move we talked about earlier, right? If we take this and this and we copy and paste it, bada boom, bada bing, you're gonna have another AB equals CD pattern right down at that level as well, 108.24. Let's just see if there's any Fibonacci confluence here. I didn't do this earlier, so this will be a surprise to me. Got a minor fib, or got a 127 a little bit above it. You're at a minor fib to 144. I personally don't really use it too much, so doesn't look like any real significant Fibonacci confluence here, but you do have that one-to-one measured move happening in that zone. So if you're a trader out there that likes to kind of condense your kill zone and really have a specific smaller area to ID your trade entry, I'd put it right inside this box. And of course, that's going to be right around the retest of this neckline, this slanted neckline as well, looking to trade it up to perhaps the horizontal level of resistance and or that higher level that we talked about. So Euro yen, delicious opportunity, but we got to wait to see if the market actually follows through with it.